Hey everybody, Chris Engelbert with Engelbert Financial Advisors in Allentown, Pennsylvania on Friday, September 25th, 2020. I don't know about you, but thank God it's Friday after a long week. We wanted to do a post today on something that's been kind of niggling at us for a long period of time. And we wanted to give you an idea on how everybody gets paid in the financial industry. I think it's hilarious that people will go to the doctor, take off all their clothes, have the doctor examine them, have the doctor say to them, hey, you need a procedure done, and they'll never ask how much that procedure costs. Well, guess what? The same thing kind of happens in the financial services industry. I can tell you countless stories of people going to a financial advisor, turning over their portfolio and having no idea how much they're paying in order to have their financial portfolio managed for them. So you can see by my whiteboard, I give a couple of examples of what costs are. If you're invested in a mutual fund, and there are many very good mutual funds out there, mutual funds can charge from anywhere from a low-cost index around 0.05% to as much as 1, maybe 1.5%. You can see that money managers, somebody actually managing your account, will typically charge between 0.5 to 1%. And then the popular exchange-traded funds, which have really exploded onto the scene, will charge anywhere from as low as 0 to 1%. Now, we're a registered investment advisor, so we typically charge our clients for a $100,000 account 1.25%. You can see by the fine writing down at the bottom, what we do is we bill that on a quarterly basis. So you don't pay 1.25% per quarter, you pay 1.25% divided by 4, or 0.3125 every 3 months. Now, that also includes all transactions, any buying or selling that is done at no cost. Now, if you're working with one of the big broker-dealer firms out there, most of them have changed their business model where they charge a fee very similar to an RIA firm. However, some of them still charge commissions to buy and sell stocks and bonds, which I can't believe people are still doing that after the last 15 years, but they still do. Now, one of the areas that you really have to focus on are tax-deferred annuities. There's some good ones out there, but tax-deferred annuities tend to be a very high-cost investment. And in fact, if you have a tax-deferred annuity inside of an IRA, it can even be a higher cost product as well. For example, we recently had a client come in who figured out that he wasn't making any money the last couple of years, and when he looked through his paperwork, he saw that he was paying, because of a tax-deferred annuity, 3% a year to have his account be invested, which is extremely high by anybody's standards. So ask the questions, how much are you being charged? Now, there's been a hyper focus on everybody going low cost, low cost, low cost, but we truly believe in actively managed accounts as well, because especially this year, you're seeing many active managers outperform their benchmarks by a substantial amount and really earn their fee. So again, ask the question, how much am I paying? Where are the costs associated with what I'm doing as far as my investments go? And then you'll know, and everybody will be happier in the long run. So that's our update for Friday, September 25th. Follow us on Twitter. We're obviously on Facebook here. We're going to be doing Trade Talks in about an hour. So if you're on Twitter, you can see us on Trade Talks. The Trade Talks will be posted on our website. So to go to our website to watch our latest Trade Talks episode as well. Have a great weekend, everybody, and we'll talk to you soon.